$20,000 is the base, but you can actually qualify for an additional $5,000, making the grant a total of $25,000 if you qualify as Biden's new first-time homebuyer assistance program. That's what we're talking about today. This topic is very likely to be controversial, so please, I'm begging you, don't shoot the messenger. Last year, Biden proposed a $15,000 tax credit for those purchasing homes to be used by first-time homebuyers. That is now not a tax credit, it's actually a grant. And the good news is it was $15,000, but now it's between $20,000 and $25,000. That's huge. That is a large chunk of change, people, a large chunk of change. Here's where it might get controversial. They're not using the typical first-time homebuyer definition. So not all first-time homebuyers are going to qualify. That's the sad part. Be sure to stay tuned to the end of the video because I'm going to answer all the common questions being asked about this. I know that everybody's been following this along since the announcement and eager to find out who qualifies and how it all works. So I've got that scoop for you today. If you do qualify for this grant, it could make the difference of having home ownership and having that pride and that excitement, or having to rent for the rest of your life. So, what is the proposed bill and how is it different than a tax credit? Well, the good news is it's not a tax credit. It's actually a grant. Typically, grants don't have to be repaid. This one does have some things that go along with it that might make you have to pay back some of that money, and we're going to get into that in just a few minutes. But it's a grant. It is not a tax credit in this new proposal. Here's some more good news. If you qualify, it can be used for down payment, it can be used for closing costs, or it can be used to buy down your interest rate. While the stated goal of the original tax credit was to provide financial assistance to help Americans buy or rent safe, quality housing, including down payment assistance, the grant's stated purpose is to provide down payment assistance for first-generation homebuyers in order to address multi-generational inequities in accessing home ownership and to ultimately close the racial home ownership gap in the U.S. As you might imagine, this means stricter criteria for those who qualify. We'll get into that in just a second. The amount credited to the homebuyers is actually more than the original $15,000 stated. It now says homebuyers may receive up to $20,000 in assistance or $25,000 in assistance if the homebuyer qualifies as a socially and economically disadvantaged individual. We're going from a very, very exciting tax credit of $15,000. Now we're talking to potentially as much as $25,000. We will discuss what those terms mean when we discuss who qualifies for the program. But before we get into that, where can you use this grant? It's pretty open, and I'm excited about that. It's not just single-family residences. It's 1 unit, 2 units, 3 units, or 4 units, and even condos are options as well. Borrowers will be able to use funds with any mortgage that can be purchased by Fannie or Freddie. What does that mean? Those are conventional loans. And is insured by FHA or USDA. It means they can be FHA or USDA RD loans as well, or that meets the definition of a qualified mortgage. It does not specifically note anything about VA at this time that I can see. If you're not sure what a qualified mortgage is, I'm going to drop a link below so you can check that out. In order to prevent people from using this grant to flip homes, it states that the prospective buyer has to repay 100% of the assistance if they leave the property within the first 12 months. It specifically says the amount the home buyer would be required to pay back would be decreased 20% for each year they live in the home. There would be no penalty after 5 years. So what that is telling us is that if you live in the home for more than 5 years, there's nothing to repay. If you live in the home for less than 5 years, depending upon if it's year 1, year 2, year 3, year 4, or year 5, will depend on how much money you'll have to pay back of this grant. If you qualify, how will they disperse the funds? This could vary state by state, lender to lender. I'm going to read you specifically what they are proposing. According to the reports, those who qualify would be distributed to the states via formula based on population, median area income, and racial disparities in home ownership. If you are a first-time home buyer, or you're thinking of just buying a home for the second time, or maybe you're looking into home buyer assistance programs, I'm going to drop a link in the description below for a free copy of my book, Mortgage Peace, where I lift the veil on mortgage lending and I share 17 years of experience with you. It's a quick and easy read, and I'd love to share that with you today. Next, who qualifies for this grant? Remember, grant not tax credit at this point. It's so important to remember that this new proposal is really focusing on first generation homeowners. It basically means people whose family did not own a home as they grew up. So they grew up renting. Specifically, the bill states that first generation homebuyer is defined as any individual whose parents or guardians never owned their home during the home buyer's lifetime, or previously owned a home during the buyer's lifetime but lost the home to foreclosure, short sale, or deed in lieu of foreclosure and do not currently own a home. If you grew up in foster care, then you would be a first generational homeowner. That's one way that you can get access to this grant. Let's say that you meet the first generational qualification as a homeowner. You must also meet the qualification that you don't currently own a home and that you have not owned a home in the last 3 years. Now, it was 15, now it's 20, maybe 25,000. Here's the other bonus. 20,000 is the base, but you can actually qualify for an additional 5,000, making the grant a total of 25,000 if you qualify as socially disadvantaged individual or an economically disadvantaged individual. That'll get you an extra 5,000. Who is a socially disadvantaged individual? That's defined as someone who's been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. An economically disadvantaged individual is defined as someone who is an income at or below 120% of the median area income, also known as AMI, for either the area where the home is being purchased, where it's located actually, or the area where the homebuyer's place of residence is located. So it looks like it could be either or. For homebuyers purchasing homes in high-cost areas, the income limit is increased to 180% of the AMI for which the area in which the home being purchased is located. I'm going to include a link below where you can check the average median income in your specific area. It is so important to note that if you qualify for the grant, whether it be the 20 or the 25,000, you still have to qualify for a mortgage loan. So if you have terrible credit, this is not going to help you. You're going to need to have acceptable credit, acceptable job history, acceptable assets, acceptable debt to income, and all the other things that we talk about when it comes to getting a home loan. I'm going to include a link here to a video that I just did recently talking about credit scores and how to improve yours. That's going to be a key point in getting approved for that loan to go along with that grant that you're approved for. What are the most commonly asked questions when it comes to this proposal? The first most common question, or the big one that people are asking, is can this grant be used in conjunction with other programs? According to the proposal, assistance may be provided to home buyers receiving assistance from other sources, including other federal, state, and local programs, as well as private and nonprofit sources. So it looks like if you're receiving money from other sources, that will not eliminate you from also being able to receive money from the grant. What if you were married, but only one of you qualified for the program? Now, I don't have a lot of information on this, but this is what I know so far. If you qualify and your spouse does not, then it might be possible that if you can qualify on your own without the spouse being on the title or the loan, it sounds like you might be able to take advantage of this. Next one, will the interest rate be higher on this grant? And from everything that I'm reading in the proposal, I do not believe that the interest rate for this particular grant is going to be higher than the other going interest rates. So it sounds like you can get up to $25,000 and even get a great interest rate. What is the likeliness of this passing? In order for this to pass, it's going to have to clear some significant obstacles and also pass through both houses of Congress. Unless they put this with a bigger infrastructure bill and maybe it can kind of slide through quickly with that, as you can already see from my previous video, there's been a lot of changes to this and there may be more changes to come. Anything is better than nothing, and I'm really looking forward to helping people with home ownership with hopefully this grant that will be passing soon. Be sure to leave me a comment because I want to know your questions. I want to know your comments on today's video and on this topic in general. If you want to stay up to date, be sure to subscribe so you don't miss any of the scoop. I'm going to continue covering this topic. There are several other big actions being taken by the Biden administration to avert a housing crisis and completely avoid a big wave of foreclosures. It's kind of a big deal. It's extending the forbearance for the pandemic-related option, and on top of that, requiring lenders extend loan terms, in some cases up to an additional 40 years. Check out my video and I'll see you there.